Good morning and welcome to Market Cafe with me, Ankur, Mishra and Kanishka Sarkar. In this 1 hour, we'll bring you all the news that matters to you before opening of market. But let's get started with US. Although there was a holiday yesterday, but US futures are showing some action. Good morning, Kanishka. What's happening in United States?
Good morning, Ankur. You're absolutely right. The market was closed, but stock futures, those rose last night after Donald Trump said over the holiday weekend that he has agreed to delay tariffs of 50% on the European Union. Now, Dow Jones Industrial Average futures, they added more than 400 points or about 1%. S&P futures climbed more than 1%, whereas Nasdaq 100 futures climbed more than 1% as well. Now, despite a negative trend on Wall Street last week, that is the way it ended on Friday, futures did rise on Sunday and Monday night as Trump on Sunday said that he would push back the 50% levy deadline on EU to July 9th. Now, that comes as he had last week proposed an import tax of 50% on EU beginning June 1.
Right. If you talk about crude, there was some pressure because crude remained, the WTI crude remained around $61. And if you talk about Brent crude, it remained around $65. Now, as far as the deal between US and EU is concerned, that has given some confidence. And also remember the meeting which has to be held later this month, that was advanced by 1 day. Earlier, the meeting was supposed to happen on 1st of June, but now that has been advanced to May 31. And more than that, there is also one more online meeting which is supposed to happen on 28th May led by Russia. So all in all, the Brent has climbed to $65 per barrel and WTI around 61.
That's right. We also have a lot of global cues to watch out for. For instance, we have the Consumer Confidence Board that's going to come out with its index in the US. In the Eurozone, we also we have the Consumer Confidence Index that's going to come out. In terms of earnings, we have Xiaomi who's going to report its global earnings for the quarter gone by. There's a lot of corporate action that's expected back home as well. For instance, Hindustan Copper Board is expected to mull fundraising. It's also the last day to buy shares of ITC and Colgate Palmolive, as well as L&T Finance, which as the shares are going to trade ex-dividend today. In terms of other events, we have tentative launch for Musk's prototype Mars rocket. On the other hand, Bitcoin 2025 conference, that's expected to be held later in the day. Apart from that, Minneapolis Fed President Neil Kashkari is expected to speak later in the day.
Moving on, keeping an eye on the global news as Trump ramps up tariff wars. Top trade officials from European Union and China are planning to meet again early next month amid signs that both sides are stepping up trade relations. This is happening because they want to push against Trump's pressure, which has been persistent on both the sides. Reportedly, the Chinese Commerce Minister Wen Tao and the European Commissioner for Trade and Economic Security Maros are set to meet on the sidelines of a WTO ministerial meeting, and that will happen in Paris early next June.
That's right. And as we told you earlier in the start of the show, Trump's decision to delay tariffs on the European Union led European markets higher. But it didn't stop at equities. Money markets too took a fillip from the announcement. The euro too advanced a 1-month high. Now, focusing on the comments from this European Central Bank President Christine Lagarde, who said that she expects the euro to become a viable alternative to the greenback. Now, earning the 20-nation bloc immense benefits if governments could only strengthen the financial and security architecture. Now, the ongoing changes in the global narrative, she believes, could become a global moment for the euro. But she also believes that the currency will have to earn the influence over time.
Right. And moving on, talking about the global stories, shifting focus to some stock-specific action. Chinese automaker BYD shares plunged as much as 8%. That's taking a steep hit from last week's record highs as Street digested company's decision to slash prices. The company is reducing prices of 22 electric and plug-in hybrid models until the end of June. The latest development follow other price revision the automaker announced earlier in the year. Analysts from Citi expect BYD's decision to have caused a 30 to 40% spike in footfall at its dealership stores between May 24 and 25. Looking ahead, analysts are not concerned about price cuts eroding the competitors' market share.
All right, then moving on to an exclusive then. Now, sources tell ET now that US team is expected to visit India in the coming weeks, and it'll have the next round of talks on the first tranche of India-US BTA. We also learned that India-US are looking at an interim trade deal before July 9th. Sumita is here to tell us all the details.
Right, so a team from the US is expected to visit India in coming weeks, and that's essentially what sources are telling ET now. The team is expected to have the next round of talks on the first tranche of negotiating a bilateral trade deal with India. Remember, India and US are looking at an interim trade deal before July 9th. This is essentially when a temporary suspension on steep US tariffs that runs out, and India is seeking an exemption on reciprocal tariffs on domestic goods. Remember, India also remains protective of several sectors, including agriculture and dairy products. Remember, Trump gave a 90-day tariff reprieve on reciprocal tariffs, so that is about to end in July, and India is expecting to crack a deal before that because you do have the baseline 10% tariff rate that is still continuing, so India is expecting and hoping for that to get lifted as well. This is coming in the backdrop of an Indian team visiting the United States for negotiations that was led by Chief Negotiator Rajesh Agarwal, where he held talks with his US counterparts. And in a diplomatic nudge, the Commerce and Industry Minister Piyush Goyal also visited the United States and met with US Commerce Secretary Howard Lutnick to negotiate that trade agreement. In fact, he also stated that both sides are committed to enhancing opportunities for our businesses and people. Remember, India and the United States are aiming to conclude the first tranche of the BTA by October 2025. Given the fact that US is India's largest trading partner, both sides are also looking at doubling bilateral trade by 2030 to $500 billion.
Sumita, stay with us because a week after Commerce Minister Piyush Goyal visited United States and had largely productive trade talks, Foreign Secretary Vikram Misri is also set to depart to Washington. The visit comes as a 90-day tariff deadline approaches in less than 2 weeks. Misri is expected to discuss a framework for the bilateral trade deal. Sumita joins in with more details.
That's right. Foreign Secretary Vikram Misri is all set to travel to Washington for a 2-day visit to meet senior officials of the Trump administration from May 22nd till 29th. In fact, that's essentially what the Ministry of External Affairs announced. The MEA also says that this visit essentially is a follow-up to Prime Minister's visit to the United States in February 2025. And that's essentially when both the sides had launched the India-US Compact tie-up, which is essentially catalyzing opportunities for military partnership, for accelerated commerce and technology. Remember, this is also coming in even as officials from the United States are expected to visit India, according to what sources are suggesting, to further the talks on the first tranche of a bilateral trade agreement. Prime Minister Narendra Modi, remember, during his visit in Washington in February this year, had held talks with Trump administration on negotiating that first tranche of a mutually beneficial BTA by the fall of 2025. Meanwhile, what you also have happening currently is an eight-member all-party delegation led by Congress MP Shashi Tharoor that's also set to visit the United States after winding up its ongoing visit to Guyana, Panama, Colombia and Brazil to carry forth India's strong message of zero tolerance against terrorism. So the delegation will be visiting, which visited New York en route to Guyana, will be returning to the US for meetings with lawmakers, leaders, opinion shapers and more.
All right, thank you, Sumita, for getting us all those details. But now let's move on. Now, after the brutal Pahalgam terror attack, India didn't just strike military, it also launched a calculated diplomatic offensive. From expelling Pakistani personnel to suspending the Indus Waters Treaty, India also called on the IMF and World Bank to review aid to Pakistan. Now, key global players including France, the UAE and Japan have backed India's stand. However, Indian MPs are also visiting 30 global capitals to send out India's message against its no tolerance for terror stance. Now, Islamabad is playing catch up. Prime Minister Shehbaz Sharif landed in Turkey, thanking President Erdogan for standing with Pakistan during the past standoffs with India, a clear attempt to gather international sympathy and support. Now, to understand more, we caught up with Pathikrit Payan, who is a geopolitical expert. Let's listen in.
Turkey has been one of the tried and tested friend, and the reality is that countries like Turkey will not change their loyalty just because we have done an operation Dost and helped them in terms of their emergency. So, they are not like a country like India, which reciprocates in terms of friendship and loyalty. So they would help Pakistan. And let me tell you one thing, it might sound very bitter. Most of the major countries of the world, especially in the Western Bloc, they know exactly what Pakistan is. Pakistan is an incubation hub for terrorism. Pakistan has been harboring terror organizations. People from Pakistan, terrorists from Pakistan have harmed many countries in the world. But unfortunately, Pakistan, is a country which is with something called, it has its own nuisance value. So most of these Western countries, when they actually give loan or aid to IMF, they exactly know what they're doing, because they want Pakistan to survive for the purpose of containing India.
From market to geopolitics, Israel continues to pound Gaza, claiming lives at an unprecedented rate on a daily basis. According to authorities, the Israel offensive has claimed 81 lives. Messaging on ceasefire has been rather misleading from both Hamas and United States. Reports claiming that Hamas has not in fact agreed to a ceasefire proposal. Instead of an agreement with Hamas, what United States says is that there is a temporary ceasefire agreement proposal with the Israelis, and what this would do is to allow half of the living captives as well as half of the deceased to be returned. In turn, White House believes that this would lead towards a diplomatic path of discussions that could result in a permanent ceasefire. With this, it's time to take a quick break, but don't go away. We'll get you updates from Asian Pacific markets. Welcome back after the break. You're watching Market Cafe with me, Ankur Mishra and Kanishka Sarkar. Let's take a check how Asia Pacific markets are performing. Look at Nikkei. It is down around 89 points. That accounts for 0.25%. But importantly, Nikkei is indicating a data which has been released by Japan, stating that it has lost the top creditor status to the world. Apart from that, you also look at Shanghai, how it is performing, because there are renewed talks between China as well as EU after there was snuff from President Trump. So on that front, a flat to positive start on Shanghai. Hang Seng is also up around 34 points, so marginal gains there. And there, balance of trade data was released earlier, where the expectation was that imports will rise 15%, but actual data came 16%. Similarly, exports has risen 18%, which is also better than expectation. KOSPI, you can see 1% high on President's comments, which came earlier, because there is an election which is supposed to be held on 3rd of June. And before that, the prospective candidate had given comments that they will have a discussion with US President on the trade talks. So on that front, you can see more than 1% high on KOSPI, but kind of a mixed signal coming in from Asian markets, and particularly Japan. You should focus that it has happened first time in 34 years that it is no more world's largest creditor, and that position has been taken on by Germany now. But moving on the comments which is coming in from Bank of Japan Governor Ueda, who believes that central bank now has to be vigilant to the risk of rising food prices that could push underlying inflation higher, which is nearing 2% target. He says a renewed rise in food prices, particularly a 90% spike in the price of rice, is pushing up not just headline but underlying inflation, which is typically influenced by improvements in the economy and a tight job market. The remarks highlight how BOJ is keeping an eye on not just economic risk but higher US tariffs, but simmering domestic inflationary pressure in judging how soon to resume interest rate hikes.
That's right, Ankur. We also have some data coming in from China then. Now, industrial profits in China have risen despite prohibitive US tariffs and persistent deflationary pressures. Accumulated profits at major industrial firms climbed 3% in April after returning to growth in the first quarter of this year. It's rising 0.8% from a year earlier. This is reversing the trend of decline since the third quarter of last year. The data show that in the first 4 months this year, industrial profits have risen 1.4%.
Right, and even if you talk about our markets, the indicator is not showing any great sign, because you would see that GIFT Nifty is showing just a premium of 1 point. So no particular cues. The GIFT Nifty is hovering between green and red as we speak, 2 points up right now. But moving on, Rakesh Gangwal Chinkaku Family Trust to sell 13.2 million shares in airline major Indigo. The floor price is set at 5,175 per share. My colleague Anurag Joshi is actually here with more details.
Indigo founder Rakesh Gangwal and a promoter entity will sell 13.2 million equity shares of the airline shares. This is according to a term sheet seen by ET Now. The sellers will offload 3.4% shareholding of Interglobe Aviation in a secondary equity trade. This will be via a block deal that will close on May 27 morning. The deal size is over 6,800 crore rupees, and that's $803 million. The placement agents are JP Morgan, Morgan Stanley and Goldman Sachs. The offer floor price is 5,175 rupees to the last closing price. The sellers are currently holding 13.5% equity stake. This is a pre-trade shareholding in the airline. Now, the sale by Gangwal and the promoter entity is a trend which has been seen of founders selling their equity stakes in companies to monetize their holdings at a time when the equity markets are showing a sign of buoyancy.
All right, there is a relief which is coming in for JSW Steel, and that's just an interim relief because Supreme Court has ordered status quo on NCLT proceedings on liquidation of BPSL. Remember, Supreme Court had earlier declared that the resolution which was implemented for BPSL was not proper. There were improper dealings by COC as well as JSW Steel in terms of implementation of the resolution plan. And because JSW Steel has decided to file a review petition, there was an interim relief which was given by the top court till the time that hearing is disposed of. So this is not a permanent relief which is coming in for JSW Steel, but for now, till the time the review petition is heard, there will be status quo maintained in terms of liquidation of Bhushan Power and Steel. We also caught up with Sandeep Parekh, who is managing partner FinSec Law Advisors on the matter. Let's listen into what he had to say on this.
I think it's a very good measure from the Supreme Court because I think the order itself was quite not just bad for JSW and the companies involved, but also quite disastrous for the entire insolvency process. And therefore, I'm glad that at least they've stayed their own order for the time being, which itself is a good step because usually when review petitions are filed, most people don't get relief. So I think it's a great step. I'm not saying that they're going to win at the end of it, but at least stay ensures that they don't need to unscramble the egg later.
All right, then that's the expert view coming in on the JSW Steel matter. But moving on, Prime Minister Narendra Modi has lambasted Pakistan for endorsing cross-border terrorism. He said that it views terrorism as tourism, which he called a serious threat to the world. Now, while addressing a rally in Bhuj, Prime Minister Modi referred to Operation Sindoor, in which India launched precision strikes on terror camps in Pakistan and POK, describing it as a mission to save humanity and end terrorism. Let's listen in to what Prime Minister Modi had to say.
मैं कच्छ की इस धरती से पाकिस्तान की सीमा पर सटा हुआ मेरा जिला है। मैं पाकिस्तान के लोगों को भी कहना चाहता हूं, क्या पाया आपने? हिंदुस्तान दुनिया की चौथी इकोनॉमी बन गया और तुम्हारा हाल क्या है? तुम्हारे बच्चों के भविष्य को बर्बाद किसने किया? तुम्हें दर दर भटकने के लिए मजबूर किसने किया? पाकिस्तान के हमले का जवाब हमने इतनी ताकत से दिया कि उनके सारे एयरबेस आज भी आईसीयू में पड़े हैं, आज भी आईसीयू में पड़े हैं। और तब जाकर के पाकिस्तान शरणागति के लिए मजबूर हो गया। पाकिस्तान को लगा बच नहीं सकते। भारत ने रौद्र रूप दिखा दिया है और आखिरकार ये हमारी सेना का पराक्रम था, ये हमारी सेना का साहस था, ये हमारी सेना का सटीक ऑपरेशन था। कुछ ही घंटों में पाकिस्तान ने सफेद झंडा फहराना शुरू कर दिया।
Shifting focus to power demand now, with the onset of early monsoons across states, power demand has taken a sharp hit, according to dip of nearly 11% over the last 10 days, which has been analyzed by my colleague Prakash Priyadarshi. Let's go across to Prakash for more details.
Yes, there's a decline in power demand due to change weather conditions thanks to heavy rains and thunderstorms in various areas. As per the Power Ministry's data, peak hour power demand has been reduced by approx 11% in the last 10 days. Peak hour demand has been decreased to 198 gigawatt on May 25 from 221 gigawatt on May 15. Along with that, the government has met roughly 200 gigawatt power demand during the day on May 25 as compared to 230 gigawatt on May 15. Along with that, UP registered the highest power demand at 27,400 megawatt, followed by Maharashtra at 22,495 megawatt. Along with that, there is no power shortage across the country during peak hours. A significant growth in power generation from various sources such as thermal, solar and wind energy. However, as per the Power Ministry's statement, peak hour power demand likely to cross 270 gigawatt during ongoing summer season. The government has already prepared an emergency plan to meet any surge in power demand during June and July.
Now, sharp hit in power demand due to monsoons. But again, Mumbai wakes up to the second day of monsoon with light drizzling, which is expected to intensify by the end of the day. In the southwest, monsoon made its earliest ever onset over the city, beating records that go back more than 7 decades. The rains didn't just mark the seasonal shift, they also shattered multiple long-standing record-soaked city streets and sent civic agencies scrambling. Now, some parts of the city recording over 200 mm of rainfall between Sunday midnight and Monday afternoon. The IMD has upgraded its forecast to a red alert, warning of heavy rainfall with thunderstorms and gusty winds in Mumbai as well as the neighbouring districts of Thane, Raigad and Ratnagiri. We also
little different monsoon in that respect, and possibly we will see this activity going on for the next about 3 days or so, simultaneously on this Western Ghat side, West Coast also, and over Northeast India also. Another system comes up in the Bay of Bengal, which takes it further. That system will be coming up around 27th of May or so, 26th night, 27th of May, which will revive the activity over the eastern parts of the country, be it the coastal parts of Odisha, Northeast India. So that will be a fresh surge, which will, so far, it was the Western Arabian Sea current which was advancing.
With this, it's time to take a quick break on Market Cafe, but don't go away. More news and updates will follow on the other side.
Welcome back to ET Now. You're watching Market Cafe with me, Kanishka, Sarkar and Ankur Mishra. Now, as we are looking at a flat start to the markets today, Rabinder is here to tell us about all the stocks that are expected to be in focus. Good morning, Rabinder. Which are the stocks on your list?
Well, yes, good morning. Shilpa Medicare can be in focus on back of Q4 earning. Company reported revenue at rupees 331 crore. We saw an uptick of more than 13.5% year-on-year basis. And if we talk about net profit was down by 40% with an exceptional loss of 28%. And if we talk about EBITDA margin, then company's EBITDA margin saw an 85 basis point decline year-on-year basis. Moving to next, Schneider Electric can be in focus on back of Q4 earning, where company reported revenue at 587 crore. We saw an uptick of more than 24% year-on-year basis, and EBITDA margins saw a decline of 77 basis point year-on-year basis from 15.5% to 14.8%. And board has also proposed capacity addition of 6,000 panels at Barodara plant and 40,000 breaker capacity at Kolkata plant. Moving to next, Aurobindo Pharma can be in focus on back of Q4 earning, where company reported revenue at rupees 8,381 crore. We saw an uptick of 10.5% year-on-year basis, whereas company EBITDA margin saw an uptick of more than 7% year-on-year basis at rupees 1,791 crore, whereas company's EBITDA margins saw a decline of 70 basis point year-on-year basis. Apart from this, NHPC can be in focus, where commissioning of 3 units of Subansari Lower HE project is expected in June 2025, subjected to NDSA clearance, and the remaining 5 units are likely to be completed in the phase of May 2026. Apart from this, Dabur can be in focus, where company has approved the amalgamation of Sesa Care Private Limited within the company and their respective shareholders and credited. And lastly, Motherson Sumi Wiring can be in focus, where board meeting is scheduled to be held on 29 May 2025 to consider bonus issue.
Thanks, Rabinder, for that update. And also, just to note that now Nifty implied open has slipped to red, 6 points down. But moving on, the FNO expiry framework, which was much awaited, now SEBI has given clarity. There is a framework which has been issued by market regulators stating there will be 2 expiry days, Tuesday and Thursday. Remember, there was a draft circular which was issued by SEBI earlier, stating the same days, but there was a speculation whether or not SEBI is in favor of other working days as well, because the feedback was given on the draft circular. And more than that, sources have informed us that NSE was actually interested in shifting its expiry day from Thursday to Tuesday. Remember, there was an earlier application which was made for shifting its expiry on Monday, and after that market regulator came into action and draft circular was issued on expiry days, and the status quo was then held by NSE on shifting its expiry. But we understand through sources that the exchange will now move application as per applicable laws, and in this particular framework SEBI has allowed exchange to approach the market regulator till 15th of June if they want to change their expiry days. So all will depend how market regulator will actually give its assent to shifting the expiry days. But for now the status quo is maintained. Whatever was suggested in the draft circular, SEBI has held those thoughts, and 2 days expiry will be there, Tuesday and Thursday.
That's right, status quo on F&O expiry days, but shifting focus to the primary market as well now, Ankur. Now, we discussed the do's and don'ts of investing in IPOs. We discussed the valuations and fundamentals of Skoda Tubes, Schloss Bangalore, Prostam Infosystems, and also AG Swopak to understand the future growth prospects of these companies. Let's take a look.
Operating profitability is not converting directly into the operating cash flow, and in that way the concern related with its growth will continue, because out of its total gross proceeds from the IPO, 50% of that it is going to utilize for the working capital requirement only. In this way, we don't know what would happen with this company in next year, when it will again require for a working capital, because of this working capital requirement, if the promoter holding is coming down or equity is diluting in this year, one can say that in next year, if we will not get working capital requirements or working capital funding from the banks, it will again have to go to the investors for this working capital funding, and the further equity dilution may happen. Second is that it follows this stockist based business model, in which its performance dependence would continue to be high on this stockist. And third thing is that this stainless steel tube segment is highly fragmented, and Skoda has merely 5 to 7% kind of a market share, or until and unless the company would completely get a solution for this working capital requirement, it's very difficult to say that what would be the future of the company in next 3 to 5 years.
Right, Abhishek, high customer dependency, high stockist dependency, and in terms of performance, only 5 to 7% market share. But Sharon, if you talk about FY28, FY29 P, how do you assess this company now? What things one should keep in mind if somebody is investing in this IPO, or you should avoid?
So again, like Abhishek said, 60% of the revenue is coming from the top 10 clients. So basically, they have no say when it comes to, they can't increase their margins. They can't say, okay, give me my payment fast. And it's quite evident their margins were like 4-5%, and it's just improved last year to around 6.5%. Now, comparatively, there are already listed peers, more diversified. I would say Ratnamani, Venus Pipes. They have a net profit margin of 10 to 12%, and this company has a margin of 6.5%. So why would anybody pay a premium or similar valuation to this company compared to a listed player which is performing better, is more diversified? Again, like I've said, again it is stuck in a working capital issue. Basically, it shows that the working of the company is not up to the standards. Maybe the money which they raise will help them, but again, if you want to grow and increase your revenues, again your working capital cycle will get stuck in the coming 2-3 years. Now, this company is more or less valued on the higher side, around 27 to 30 times. It will always trade at a discount to your better players such as Venus and Ratnamani. So again, on valuation front, I would say it's more or less decent to slightly overvalued. So I would have a cautious approach. I would review the company in the next 3 to 4 quarters. I will see how their working capital cycle is going ahead. Is it improving or at the same stage again?
Schloss is largely into the luxury hotel segment. It has almost 13 properties in India, and on these 13 properties, 5 are its own, 7 are on the management contract basis, and 1 is on the franchisee base. It has total over 3,500 keys. The critical thing here is that almost 94% of its revenue is coming out from the 5 properties. So although it has a larger capacity, but only 34% are really contributing to the revenue. So company has a plan to expand this 13 properties to 20 over the period, and adding almost 19-20% to its keys. But there is a concern that when the existing non-owned properties are not contributing so much to the revenue, I think what would happen next to this additional capacity, it's difficult to say at this point of a time. Second is that there is a limited financial history which builds up confidence, because what we see that for FY23 and FY24, although company has reported loss in the P&L, but with this loss, its net worth was negative. So that is again a concern. And third is that the valuation. if we see that it has only 13 properties and reported almost 48 crore kind of a profit in FY25, its market cap to sales coming out to be 11 times, which I think it's not available at a cheap valuation.
So I want to ask you about the concern which Abhishek also raised. Have you done the number crunching already? They are looking weak financials to you?
So basically, this whole IPO is nothing more than a balance sheet cleanup. So 2,300 crores will go towards debt reduction. So that will inflate the profit in the next year. On that basis, you will see even with simple slippages, a little bit slippages always happen. So next year, the stock will trade at 50 times PE. But what an investor has to see, where is the next leg of growth coming from? The company has 13 properties currently, but 90% revenue comes only from 5 properties. And some of the properties even currently are in a loss-making stage. They are not able to generate profits. Secondly, their major leg of growth is going to come after FY28. And given that they are having properties, coming up properties in Srinagar, Ayodhya and some Agra also. But given the current state in Srinagar, you expect to have some delays. So even if you say FY29, they become from 13 properties to 20 properties. By FY30, you can barely get a 6 to 7% CAGR revenue growth. For an investor, that is absolutely basic. And if you see valuation comparative to Indian hotels or Oberoi, look at the aggression. From 380 hotels, they are planning around 700 hotels, Indian hotels. So you have a lot of revenue visibility vis-a-vis your peers. So I said for valuation, company is valuing itself with Indian and Oberoi, but in terms of growth, there is negligible to nil growth. So overall, it's slightly on the expensive side. And if you would, I would give a avoid rating on this at the moment.
In 9 months FY25, it reported roughly 22 crore kind of profit with a double-digit kind of EBITDA margin, 13.4%. But the crux doesn't lie in this P&L. It lies in the cash flow. So despite this double-digit EBITDA margin, the company is reported operating cash flows, and this is because the company's overall business model is working capital intensive. So whatever you are generating in the operating profitability, larger part of that has been eaten away by the working capital requirements. So in recent days, its working capital days was over 100, and that is the key concern. And second major concern which I would like to highlight here is that the company's raising almost 168 crore rupees from this IPO, and 43% of that fund the company wants to utilize for the working capital requirement. It means the company is raising funds for from a long-term resources, but utilizing it for the short-term requirements. And this is a major concern, because in this way we are not getting the way or the visibility by which the future growth, where from the future growth would come into the company. And considering that this double-digit EBITDA margin or the profitability will not give any kind of a visibility or future prospects of the company.
So negative operating cash flow plus the proceeds are utilized in a manner for short-term usage. Sharan, what is your assessment on this IPO? Does this negative operating cash flow sound of something?
Yeah, it's a very big negative for the company. If you see, the company's basically 60% of the revenue comes from only five clients. So there you see they have no say while they are doing business with them. It's clearly evident. Their receivables are 120 days. That's 4 months from the time of sale to get your money back. That's why their working capital cycle is so high. So currently, if you see, and even the IPO process, around 72 crores is just for working capital requirement. So recently, a lot of SME IPOs, if you see, are facing the same issue. And so this company is also no less or no different in the long term. So basically, on valuation front, the only positive is it's very decently valued around 19 to 20. But the current working of the company is not that great. It is expanding into the lithium ion battery segment, which is again a good growing segment. So even on that front, the company has themselves said that their inventory levels will rise because they are just starting out. So that will have more pressure on the working capital cycle going ahead. So overall, I would give a cautious review on the IPO, only on one front because the valuation decent and remaining working of the company is not up to the standard.
Let's focus on other news as well. Liverpool Football Club's Premier League victory parade actually descended into a chaos on Monday evening when a car collided with pedestrian in the city centre. At least 27 people, including 4 children, were taken to hospital after the disastrous accident, and emergency services rushed to the scene. In India, 3 fresh COVID-19 cases, 2 in Gurugram and 1 in Faridabad, have been reported in Haryana on Monday, bringing the total to 12. Meanwhile, all government and private hospitals have ordered to make arrangements for the medicines, oxygen cylinders and other medical equipment.
Shifting focus to the world of sports, then Mumbai Indians star batter Suryakumar Yadav broke a 15-year-old record of Sachin Tendulkar as he made a 50 against Punjab Kings in Jaipur. Suryakumar now has the most runs for Mumbai Indians in an IPL season, surpassing the legendary Sachin Tendulkar's 2010 record of 616 runs for the franchisee. Now, meanwhile, Lucknow Super Giants is all set to clash with Royal Challengers in Bengaluru today. In Lucknow today, I'm sorry. Well, before we wrap this edition of Market Cafe, we have Vikas Khemani, who's the founder at Carnelian Asset Management, who had shared with us the list of sectors that he's positive on. So let's go across and listen in.
All these 3 things about US economy you've been talking about, have not surfaced with the rating downgrade. It's been around for more than, 1.5, 2 years, I know. I mean, US debt, deficit, or for that matter, in delinquency in their credit card has been around for 2 years. So I think, very often we tend to call these, situation, but nobody, fact of the matter is nobody knows what time US economy will get into recession, what kind of it will peak out. So I think, and generally speaking, IT sector, in my opinion, is not, we've seen IT sector has been reasonably all right, growing well in last 3-4 years. And these kind of intermittent cycles come in any sort of industry. We are not very negative on IT sector. We've been saying for quite some time and continue to remain positive, because IT is not only necessarily linked to economic growth, because a lot of digital transformation has to happen, the cost rationalization has to happen, and IT is a key enabler of that. So I think there are many more levers other than only the economic growth. A lot of times companies have to spend money in order to just survive, forget about grow. So I think and some of the sectors which are in the manufacturing front, where India is exposed, not much exposed to US, there India tends to benefit from the market share gain, which is happening because of China plus shift. And that, I think, can compensate for if economy slows down. Currently, there's no such sign, but if that slows down, and market share gain can compensate for that. So I don't see US economy slowing down as a major risk to Indian economic growth. Market sentiments can go up and down depending on how the news flow comes, but I don't see major economic risk if US were to slow down to India.
We have liked financials quite a lot, although I've taken some money off the table. That's because what's happening is, I think you're going to see a consolidation of profits, at least for large private sector banks in the current financial year. If interest rates come down, what happens is their asset book is really getting repriced lower. They will adjust over a period of time with their deposit costs also kind of coming down, but the profit growth will be probably muted, I would say, in the current financial year, only to accelerate next financial year. So my sense is, given how well financials have done, they are the only conspicuous sector which is at a new high. My sense is that you should lower your expectations on certain private sector banks. To answer your question, I'm very excited about telecommunications, life insurance companies, utilities, digital businesses, so on and so forth. And like I pointed out, with the improving credit trajectory, I think consumer discretionary, like automobiles or some other consumer discretionary items, are also emerging as buy themes for me.
Why do you like life insurance? Growth is just not there. There is no growth.
Sorry, why do I like IT?
No, insurance. IT में भी growth नहीं है, चलो दोनों में growth नहीं है.
नहीं, life insurance में growth है. So fortunately, I'll tell you why I like life insurance. Look, this is a very consolidated business, right? You can see that the top 4 companies which are eating into the LIC's market share are all banks, right? And they are definitely kind of doing quite well as far as both APE, the insurance premiums are concerned, as well as value of new business, which is really, you can call it profits. both those fronts, they are doing well. The valuations have come down because of severe concerns on regulatory aspects. So surrender value, all of those aspects. There were challenges on bank assurance, whether that channel will get kind of cut for some of these banks. All of those regulatory concerns are now behind us.
If you like this video, then like, share and subscribe to ET Now.